Todd Schoenberger, Managing Director of Land Coal Trading, with us out in Philly right now. Todd, it's a different market. As of 2012, we're seeing this market react very differently to the hiccups in Europe than we did pre-Christmas.
That's right, Tracy. Look, like you said it, headline news right now is all about Greece and this Greece deal that we keep hearing that's going to happen every single day, and nothing has happened. So this market right now is basically swimming in quicksand. There's nothing happening. Volumes are incredibly low right now, and it's really not looking good, because if this continues for the next few weeks, you're going to continue to see low volumes and just a very flat market.
Why do you say swimming in quicksand? Because, one could also argue that it's withstanding this stuff much better. Is it that we're just so sick of it and we're over it, and that the notion that another Lehman potentially happening out in Europe is gone?
Look, we're definitely not sick of hearing about this story, because it is the one dominating story that can influence the markets for the rest of the year and probably well beyond that. Look, this issue with Greece, so you have, as we talked about before, Tracy, you have 5 countries right now that are very vulnerable, and Greece clearly is the smallest of those 5. Now we're talking about a debt deal. We're talking about a deal with its creditors, with other governments, with hedge fund investors. How much money are they willing to give up on these Greek bonds? And the question will be, is it 50 cents, 60 cents, or 70 cents? The deal has to be in place, though. The EU is even saying that this deal has got to be in place by next week, or the Greeks are out of the euro. And if that's the case, it's going to be a ripple effect throughout the rest of those vulnerable countries. And some of those are G7 countries, most notably Italy. So when you start thinking about where we are going for the U.S. economy, we need Europe to survive. And if they don't survive, that's going to have a negative impact on this stock market. But right now, traders are in a wait-and-see mode.
Okay, so you're still worried about Europe, because there are others that are just saying, look, we know the EU, the ECB, we know everybody's going to step in and backstop it somehow. So let's just move on and focus on the United States.
Listen, I wish it was that easy. Look, out of those 5 countries, Portugal, Ireland, Italy, Greece, and Spain, you're looking at $1.5 trillion in debt that's outstanding, that's held by European governments right now. If you look at the U.S. bulge bracket banks, you have another $500 billion that are being held, and these are the big money center banks out of New York. So if there's a default, if any type of default takes place, clearly it's going to impact the European countries, but it's going to impact us here in the U.S. So yes, we are keeping a close eye on what's taking place over there, and we need them to recover. But the problem is that it's not going to be a quick recovery. It's probably going to take years and years, and clearly it's going to impact all of us.
Before we get to your picks, what are your thoughts on this earnings season, which we're almost done with at this point? But I guess we got a little bit of both, right? We got some good, some bad, some really ugly.
Look, I mean, the Apple story is great. Caterpillar was a great story. It's great when you start seeing analysts lower the bar as much as they have, and you have companies that are barely meeting expectations. Look, when you can start talking about earnings per share numbers, we could talk about the bottom line numbers. Remember this, and this is what your viewers want to keep in mind. The historical average of all S&P 500 companies beating that bottom line revenue number is 62%. Right now, it stands at 52%. So companies, even with lowered estimates, lowered expectations, companies are not beating those revenue figures. And that is a cause for concern, especially going through the rest of the year. And then when you incorporate the European problems, the European zone problems, then you have to worry about how is that going to impact U.S. companies that are domiciled here. That's what's making me so concerned right now, Tracy. I'm not alone here. Traders are wondering what the next time bomb is going to be. We clearly know it's about the Eurozone region, but we also have to worry about the U.S.